I'm very much of a go, 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 like push through, move on kind of a person. We need owners, we need revenue, we need a website. I should have been way more thoughtful and intentional on how I approached the financial structure.
It's interesting that all these PMSs have raised hundreds of millions in funding, haven't been able to figure this out. Is there something that should be rethought about the way that we do property management?
It increases exponentially. Now you have to track transactions for another owner and all of the expenses that you're spending on their behalf that you want to get reimbursed for.
How did you guys manage to not let the egos get in the way?
You have to be really careful about who you get into business with.
Hello, everyone, and welcome to the Hospitality Edge podcast, where we bring together what we think are two sides of the same coin, real estate and hospitality, and where we aim to bring together entrepreneurs, operators, investors, founders, and leaders in the vacation rental space so they can tell us about their stories, the lessons that they have learned along the way, and perhaps even some of the mistakes that they might have made along the way so we don't have to make those same mistakes ourselves. Today, I'm excited to be here with Jacob. He's the co-founder and CEO at Renjoy. This is actually part of a 3, potentially 4 episode series where we're essentially diving deep into the different partners within Renjoy that have built this company. So it's been super fun. It's been super exciting. And I'm excited to have you today, Jacob. Where are you taking the call from? And thanks for being here.
Yeah, thanks for having me. It's great to be on here. I am taking this call from Colorado Springs, Colorado. We're about an hour south of Denver.
Amazing. Yeah, thank you. I like to start by asking that question. And also, before we get into the timeline, the background, and the lessons you've learned along the way, what is something that if you were to start your property management company that now has close to 200 properties under management, if I'm not mistaken, like if you had to start that all over again and you could change something, if anything, what would you do differently?
Yeah, that's a great question. There's probably quite a few things, honestly, that I would do differently. But the biggest one that stands out to me is paying more attention, having more insight and thought behind how we structure our financial systems, our accounting systems. With short-term rentals in particular, there's a massive volume of transactions, and it increases exponentially when it's not just your own transactions of your own portfolio you have to track, but now you have to track transactions for another owner and all of the expenses that you're spending on their behalf that you want to get reimbursed for. And you have to have a really clean ledger for all of that stuff. And looking back, I should have been way more thoughtful and intentional on how I approached the financial structure because it's been very painful for us as we've grown.
Have you found like a solution as far as a vendor, technology provider, process? Like what's the status on that?
I wish it was that simple. Just to give you a little glimpse into the world of complexity that we live in. I mean, you're talking about probably about 30,000 transactions a month, and each transaction has half a dozen line items. So you're talking about hundreds of thousands of line items a month you have to record and track. So with that kind of volume, typically you have a much larger organization, right? When you have that volume of transactions, usually you have a lot more resources to solve, your complexity. But we're not very big. I mean, as you said, we're about 200 units under management. That's not a huge, top line revenue, just shy of 5 million. It's not a huge company. And to be able to manage your financial complexities in that way, it's not simple as a technology, a process, a partner. In fact, when we first started, this is the thing I regret and the mistake I made. I outsourced the building of our financial systems to a third-party company that was built for vacation rental management accounting for property managers. So I thought, oh, great. They're the industry standard. They're at all these conferences. They're the ones that are most out there. They've got to be credible. They know what they're doing. Had them join on, and pretty quickly, within several months of onboarding them, found many errors. And thought, you know what, this is okay. We can live with this when we only had a dozen owners. Not a big deal. Not that many errors to correct. As we grew, and we were growing fast. I mean, we grew this company in 3 years to where we are today. And we were growing fast. We started having more of these errors and more. And then within about a year and a half, 18 months, we realized this partner cannot be with us because they're making so many mistakes. And that was the gold standard in our industry.
Mm.
And so we went through the process of ripping them out and rebuilding everything on our end, but didn't necessarily have an accountant who was really sophisticated in our industry who knew exactly how to do that. We had a finance person who had a finance background, but they weren't necessarily prepared for the complexities of what we do, because not only do you have a standard accounting system, we also have to do trust accounting, which
Mhm.
adds a whole nother layer of complexity. I mentioned the hundreds of thousands of line items. Well, there's an additional layer of using trust accounting where funds flow into a trust and you're moving money between the trust and your operating account and back and forth, and you're not allowed to commingle those funds.
Mhm.
So it gets really complex really quickly. And I wish I could say there was a tool or a
Mhm.
vendor or a process that could solve our problems, but honestly, it's very challenging. We are continuing to improve as we go, but it's a very linear improvement path.
Interesting.
I don't
And
see a
and
way
and
to
I wanna
simply flip a
try
switch
to,
and fix it.
yeah, I wanna try to dig a little bit deeper, not too much, because we can make this, an entire episode on just
We
accountants, and
could.
that's not the
We
intention
could.
either. But it's interesting because when I had Michael, one of your co-founders and partners, as well. I know he's very involved on the tech stack side of things,
Mhm.
integrations, APIs, all those kind of stuff. And I had asked him at the end, what is it that he hadn't found a solution for, in terms of the tech stack you guys have built, throughout the years. And he mentioned something along the lines of, a tool that through AI allows you to basically access, information on request from the database of all the different places where you store data. You store data on your PMS, you store data on your revenue management software, you store data, there's market data, like there's all these sources of data. Like, what if you had a ChatGPT type thing that you can ask, what was the price for the reservation, like whatever information you're trying to, get, and it just gives it to you. Now I'm curious, because now you're talking about like the accounting piece, the financial piece, and you said like it cannot be solved with just a vendor, right? It cannot be solved with just a provider. So I'm just trying to understand, like, what's the gap? Well, like, is the gap the financial
Good.
reconciliation? It's the gap the trust accounting? Is the gap the generation of the owner statements? Is it just like something that can connect it all? Is it like the solution is out there in theory, but in practice there's a lot of errors still, because each business model is different from one company to the next, and it lacks that customization? Like, what's the missing part on the accounting side, if you were to
Yeah,
try
I
to put
mean,
a finger on it?
man, if I had to put a single thing on it, um, well, with financial data, there's a lot of like security and complexity that comes with how you even access financial data. So that's one thing. Even if you do integrate tools, this is another problem we have. Let's say you've got a software for owner statements and a software for reconciliation and a software for expense tracking, which is all true today. All of those things have to communicate with each other kind of on a simultaneous basis. And there's
Mm-hmm.
no like one financial hub or database where all financial transactions flow through, because you just don't have that kind of control over your financial transactions because of how payments process and stuff like that. What makes it really
Mm-hmm.
complicated is every single vendor. Let's just take one example: how we receive money from OTAs or online travel agencies. Airbnb sends us money one way. VRBO sends us money another way. Booking.com sends us money a third way. Marriott Homes and Villas sends us money a fourth way. And each way that money is sent comes differently. And so each OTA has to have its own dedicated reconciliation process. And ideally, your PMS is solving this problem, but we haven't found a PMS that's sophisticated enough to actually break out these line items as they're received from the OTA, because some OTAs don't give you any line items. So you have to go in and manually compare the cash that came in with the reservation data you have in Guesty, and then you have to reconcile those two things before you even reconcile it within your accounting system. That's just one example. That's just how we receive money. Now, when you
Mm-hmm.
talk about spending, you've got people out in the field buying products on behalf of an owner. So you have to ensure that whenever they swipe a card to purchase something, that it's being associated with the correct property. Then you have to
Mm-hmm.
ensure other services through third parties that we organize, let's say snow removal or landscaping. We don't operate the landscaping ourselves. It's not our labor in-house. We use a third-party vendor, but that third-party vendor bills us. And then we have
Mhm.
to ensure that bill then gets transposed to the owner's account directly. And
Mhm.
while that sounds simple, the thing is with vendors, depending on their size, they may say you have to pay invoices this way. Or, oh, we actually mail our invoices by paper. Oh, we
Mm.
actually don't have a good process for sending you invoices on a timely manner. So we've had landscaping vendors who don't send us a single invoice all summer long and then send us 300 invoices in August. And now
Okay.
you have to, but you've already made distributions to your owners without truly knowing their expenses, because in trust accounting, you have to operate under a cash basis instead of an accrual basis. And so we can't actually charge the owners for the services that were rendered when they were rendered because we haven't actually received the invoice yet. So we've over distributed money to owners. And then in August, they have a $4,000 or $3,000 landscape bill that we have to charge in that 1 month. These are just a couple of examples. There
Yeah.
are dozens I can give you of that make this complicated.
Interesting. And you mentioned a great point, which is that for the size of a company that you guys have, I mean, you guys are a big property, considered to be like a relatively big property management company. You know, in the space, of course, there's companies that have thousands of properties under management, and those are even bigger. But like, you know, you're considered to be a big company, and yet, you know, talking about a top line, you know, revenue number of like 5 million or so, to your point, it's still like small business. Yet the complexity of the financials and the volume of transactions, I don't know, it's equivalent to what size business in another industry, but probably, you know, equivalent to,
Much
you know, to
larger.
your point, a much larger business in another industry, which has the resources to deal with that additional complexity. So it's it's interesting that, you know, all these PMSs that, you know, many of whom, some of whom have raised, you know, hundreds of millions in funding, haven't been able to figure this out. And it raises the question: is there some? I mean, we're not trying to save the world here or change, you know, the industry here, but like, it raises the question: like, is there something that should be rethought about, you know, the way that we do, you know, property management? As in, like, should the owners be receiving the money and then we just invoice them, and then there's the risk of like them not actually paying, right? And, you know, then you have to pay expenses on their behalf and you don't have a balance to do that with. So like, you know what I mean? Like, what does it say about this business, other than like it's a hard business to scale?
It is. This is a great example of why it's a hard business to scale. But you'll also find that many managers would employ different kind of management models to resolve this issue. They'll say, hey, like Vacasa, biggest vacation rental management company in the world. They'll say, hey, owner, we don't touch landscaping or pool maintenance. Like, that's on you. We're not even going to deal with that. That's how they solve that problem. They're like, it's too
Interesting.
hard for us to manage this profitably. You do it. We can't do it.
Mm-hmm,
And you'll
mm-hmm,
find managers who do stuff like that all the time, where they'll eliminate a few services that are too difficult for them to do. Or you'll find co-hosts on Airbnb who aren't true managers, but are
yeah.
actually managing your property. They're not licensed or anything, but they don't touch your money. And so
Mm-hmm.
they never have to worry about these things. You have to spend all your money on your own. And they're solving this problem of chasing checks, which you just highlighted by having the co-host being able to split the payment at the
Mm-hmm.
point of distribution from Airbnb specifically. So Airbnb says, okay, we earned $100. You've told me as the owner of this listing that $25 of that 100 should go to this person over here. So when we distribute the payout, it's going to go to two different people. And so your manager doesn't have to chase the check anymore. But the problem with that is that manager can only be on Airbnb, which is a huge limitation and problem for owners out there who are trying to maximize their revenue. You don't want to be single channel. It's a lot of risk.
Plus, we've heard
So I
also
don't know.
that
This
split payment not being super accurate, you know, whenever there's like long-term reservations or,
Nothing
you know,
is accurate.
resolutions
Yeah,
or,
yeah.
yeah.
Here's the thing I'm convinced of. I am convinced 90% of vacation rental management companies are not doing their books correctly. I'm convinced because every PMS, let's say a guesty rep is listening to us, or a hostfully rep is listening to us, or whatever, a streamline employee is listening to us right now. They would argue, they would take disagreement with what I said about their system not being able to manage accounting. It's like, no, we can't. But the problem is all of the PMSs we found are about 95 to 97% accurate. But with accounting, you have to be 100% accurate. Like you can't not be 100% accurate. Like that's not acceptable in the world of trust accounting. You get in big trouble if you get audited by your state regulator. And so the property management softwares out there think, hey, we've solved this problem, but the reality is they still have errors at too high of a rate.
So to try to close the loop on this, if you say that the main mistake has been like not to take that so seriously, since the beginning, and like thinking that just by outsourcing it the problem would be solved, and yet like right now you're still kind of battling with that problem, then what exactly is it that you think you could have done differently if you were starting all over again to
Great
be at a better
question.
position
Yeah,
currently? Yeah.
great question. I think we didn't structure our books as well as we could have, our chart of accounts as thoughtfully as we could have. We ended up creating two different accounting software instances, one for the trust and one for operating, but we don't actually need to do that. In fact, we can have a separate ledger account for the trust transactions to provide to our state regulator as needed without having to necessarily have a completely separate instance. But I didn't know the difference between an accounting system and a ledger and all the other like really kind of nuanced financial terms. So part of it was just we could have built it differently. And then we could have also understood, hey, this is going to get monstrously complex and we need a way to even manually manage whatever software or automations we do employ. Because I don't want your listeners to be mistaken. We do employ lots of automation and lots of systemization across our accounting software. And even still, our software tech stack, sorry. Even still, there's a lot of manual stuff that needs to go on. So I don't think it's a problem that could have been solved. I do want to make one caveat. There is a property management software out there that was built with accounting first in mind. I think it's called Lighthouse, or it used to be called Lighthouse. And I think it got bought by a larger conglomerate that owned several PMSs, but they were accounting first, which was awesome. They did solve the accounting problem, but they were terrible on a bunch of other metrics that you need to have as a property manager, because accounting is not the only thing you have to do. You still have to be good at reservations and guest comms and calendar management and all these other things. It's not the only problem.
Let me ask one last question on this, and then we'll move on. Because you when you're starting out, you have to start. Like you have to start getting traction, getting owners, getting momentum. Like there's no point in the very very beginning to go crazy trying to figure out the problem you'll have when you have 200 properties, because you don't even have one property. You start by going out there and getting some level of traction. So I guess what I'm trying to ask is, at which point of your growth, in terms of, let's say, number of properties under management, would you have paused your growth until you had solved or at least stabilized accounting?
Yeah, that's an excellent question. I think it's really difficult to say I would have done something differently than I did. It's really hard to even put yourself in that frame of mind. Try to give you an answer here. I don't know. I think the big mistake we made, and the thing that you asked me at the beginning of this podcast, what would I do differently? I would just take my financial structure far more seriously. And I because like you, and we'll probably get to this later in the podcast, but who I am, I'm very much of a go, like push through whatever, just move on kind of a person. And so I focus a lot on quick fix, move on. This isn't a big deal overall. Like we need owners, we need revenue, we need a website. Like we need people to be able to find us. Like these are all more important than the financial structure. And I think I've come to see that that's actually not really true. And I should have not pushed so hard on these other aspects of growing the business without also pushing financial maturity at the same time.
Yeah, interesting. Yeah, because both of your partners indeed have referred to you as having a lot of ambition and being, the kind of the pusher in terms of growth. So tell us a little bit about that. Tell us a little bit about the founding story from your point of view of Renjoy. What were you doing prior, and what's a little bit of your background, and yeah, let's start there.
Yeah, I mean, I'll try to keep it as brief as I can, but first I'll say the reason why I'm a pusher, because I wasn't always that way. As I kind of became an adult, became a man and went out into the working world and observed things as both, a worker, somebody trying to produce value in our world, and somebody who's also trying to invest, the accrued value I've provided in cash, like investing my money. I noticed one really, really big thing about what separates successful people and not so successful people in terms of how I measure success, which is time freedom, money freedom, travel freedom, like that kind of thing. That's how I measure success. Um, I found that the big difference between people is whether they take action or not. It's not about knowledge. It's about whether they take action or not. And so I decided pretty early on, you know what, to be successful, I just need to take action. Um, so I found that was a key distinction in my journey. Now, also, I don't want to go through like my entire professional background, but how I got started in real estate, I grew up kind of around it. My dad's a financial advisor. Has been, he's kind of a single practice. He does his own thing, but he owned some crummy apartment buildings when I was a kid in high school, and I had to go do the turnovers on those buildings. I was the one painting and cleaning and landscaping and doing all of that for what, $10 an hour. And I was doing these turnovers at his property, and I just hated it. I was like, I'm never going to own real estate. And as many of us have had over our lifetimes, we realize, oh, maybe my dad wasn't so foolish after all. Maybe there's some wisdom in being in the real estate game and investing in real estate and understanding it. And so over time, my mind changed from being that high school kid. And so I really got into real estate probably about 5 years ago. And I got into it as an agent, a commercial real estate leasing agent. I helped buyer representatives find spaces to lease. Sorry, not buyers, but lessees, people who are looking to rent space. Found out after about 3 months this was not for me. So then I turned and pivoted into residential investment brokerage. So I was a real estate agent helping people identify long-term rental real estate, 1 to 4 units in size. I did transact some apartment buildings, but they were pretty small, everything under 20 units. And so I that's where I really cut my teeth. I learned from this amazing firm out of Denver. I had a great boss, taught me a lot. I learned how to flip property, how to add value to property. I learned so much to how to invest and how to like drive value on your net operating income. But that was all long-term rental focused. And through that process, as a broker, I met a couple of guys, Luke and Michael, and I was helping them as their agent, like buy property after property. I'm like, every 6 months they were coming back to me like, hey, I'm ready to buy my next property. And I'm like, you guys are my age. How are you buying these properties so fast? So I started asking them questions. We started hanging out. I learned more about their business because they were in the short-term rental investing game. And so I started learning a lot about that and got really curious. Started doing it myself as well. And then over time, we became friends. We actually ended up buying a 5-plex together, renovating that and turning it into 5 Airbnb units. And in that process, we kind of are like, wait, who's going to manage this? Because we're all kind of managing our own little portfolios separately. And that was kind of the beginning of Renjoy. We combined our portfolios, and people quickly started asking us to manage theirs.
I wanna ask you something about what you just said there. You said that you realized the difference between someone successful and someone not successful is that the successful person will take action, right? When do you remember you first had that realization? Like when was the first shift for you that it started the process of you becoming what we're now referring to as a pusher? Or
Yeah. Yeah. I mean, there's a conscious decision around it, and then there's a subconscious. I would say subconsciously, I learned this really early on by accident. And that is when I was in college, I was an econ major, and I took an elective that was called entrepreneurship. And it's more of the theory of entrepreneurship, not the practice of it, just to be clear. But one of the great things that came out of that class, I was a sophomore, so second year of college. As a sophomore, I guess this was second semester of second year. Part of our projects were come up with a business plan that can work, like as if you were going to start a business in this location. And we were in rural Michigan. That's where I went to school, rural Michigan, Hillsdale College. And, there's nothing there, right? It's not like you can open a coffee shop and be successful. And so we had a partner for this project, and we came up with this idea of a digital marketing agency specifically for higher education. I don't need to bore you with all the details, but we came up with this idea, and by the end of the semester, we presented it, got an A, whatever on our project. But by the end of the semester, we looked at each other like, wait, we could actually start this business because Doesn't really take any money. We need to buy like a computer or two, but that's really it. I mean, we can work from anywhere. We don't need an office, or let's actually like try to make a company out of it. So at the end of my sophomore year, we started this company, and we, with it, I didn't think anything of it. I'm like, oh, it's kind of fun, whatever. So I went home, took an internship at a software company. And then about 3 weeks into my internship, my partner calls me. He's like, Jacob, we got our first deal. And I was like, no way. And he's like, yeah, I signed something for 30 grand. I was like, what? I'm like, so I went to my intern person. I'm like, hey, I got to go. Sorry. So I left and went back to Michigan and worked with my partner on growing this business. And that was kind of like an accident. And I would say subconsciously, that's where I started to learn just by taking action, being the one person in that whole class who said, you know what? What the heck? This could be a real business. Let's just try it. The one person who did that, I think that was subconsciously the beginning of my journey that set me apart. But I didn't really understand it or couldn't articulate it up until probably about 5 years ago when I was working with a lot of investors as their broker, as their agent. I was watching some really successful people and how they operated. And I noticed, because I would also talk to a lot of people who would never end up buying any investment real estate, even though they should have. And I
Mhm.
saw the difference there with my clients who actually bought, took action, did things, even ones who didn't own anything. So I would have new clients, right? Didn't own anything, young people, didn't own anything. And there's still a key difference between the path that they would be on by the ones who decided to take the leap and buy a property and the ones who didn't. And their paths are just massively divergent over time.
Wow, I love this so much because I'm also a big believer that like information is out there nowadays, and information is really not the thing that you know. It's not an excuse anymore, right? Like I don't have access to the right information. Well, the information is out there, so like it's just that you don't execute on it. Now, there's this balance that you know I'm thinking about here as you're speaking between just acting, and being that person that just acts, goes. And you mentioned that, at the beginning with Renjoy, that was pretty much your mindset. It's just go, right? We'll figure out the details later. But now that you're looking back, you're like, yes, that's what led us to today. But at the same time, that also comes at the sacrifice of like certain things, especially operationally, that break along the way. And maybe that's processes that break, clients that are lost, team members that are
Mhm.
lost along the way. So now that you look back and you reflect on that, on those two extremes of like, you don't want to be so conservative and careful and thinking about every possible way and thing that could go wrong, because if you do that, you will never act. You want to act, because if you don't act, you won't be successful. But you want to be conscious of like what you act on, what's the right thing to do, and what I mean, like that balance, between just going and planning. I think it's something that I'm curious to know how you look at that.
Yeah, no, you're hitting the nail on the head. And I think the thing I would put behind it is like the difference between acting with impulse versus acting with intention. And that's a hard balance to walk. And most people who are pushers by nature, unless they go through some kind of fire or trial or difficulty, will push with impulse rather than push with intention. And I definitely, even with somebody who's been through the fire, like I still do that from time to time. I can be still too impulsive trying to do the next thing. And the only way that changes is you mature over time. And obviously there are people far more successful than me who like I'm not sure I should necessarily be the example people look to on how to do things, but
No,
I
but at the end of the
I
day, like that's the purpose of
yeah,
this of
same
this of
problem.
this show. Like your guys have a successful business that's growing, that's thriving, and so like there are things we can learn. And so we when you look at those two, right? You said intentional, doer versus impulsive doer. What
Mhm.
does what does doing intentionally look like to you these days?
Yeah. Yeah, great question. I think one of the key distinctions I have found between like impulsive versus intentional is that intentional, it's kind of like I know where I want to go and I'm going to work backwards to get there and how to build and not in super detail, but in enough detail that you can follow it. And as part of that, one of the key things you have to have with intentional action is you have to intentionally act towards building the habits that will achieve your outcome. When you have an impulsive push or an impulsive thing, I generally see that like you have a lot of energy, a lot of motivation, a lot of excitement behind this thing, whatever you're doing, and you go and you get a lot done really quickly, but you only get like 60% of the way there or 70% of the way there, and then you get bored and you kind of get impulse and go off to do the next thing. This is like a classic visionary integrator definition if you're familiar with the EOS methodology or entrepreneur's operating system, which we use here at Renjoy. It's a great system for building a business. But in that, it explains this exact thing we're talking about, where visionaries are often these impulsive people who, like go off and chase the next like really exciting idea, implement it about 60% of the way of where it needs to be, and then move on. um, you have to have that pairing of a visionary with an integrator, the person who's like, building the operations, building the processes, the one who would have caught me with our financial structures and said, no, 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 slow down. This is really important. We have to build this right. And you have to have that kind of dynamic partnership to grow super well.
I love that. That's super interesting. So walk me through kind of the evolution of your role as the company has gone through different stages of growth. From being a lot, from my understanding, sales oriented to like continuously trying to think more strategically and be more conscious on where you spend your time.
Yeah, I mean, from the very beginning, I was kind of the driver. I got Michael and Luke to buy the fiveplex with me, and then I kind of brought up the problem of like, well, who's going to manage it? And I'm like, kind of brought up the idea of, well, let's start a management company. And so I've kind of always been a little bit of the ringleader of our group. Um, and so, yes, sales has been a big part of my growth, but even to get Renjoy off the ground from a concept to a business, that was mostly my work, my pushing there. Not to diminish or anything that Luke and Michael did. They were the ones who got me interested in short-term rentals in the first place. So just to be clear here, this is not like my idea. Um, but through that pushing, as we started our company, helping like guide and think, what could it be? How are we going to build it? Like, what are kind of our natural roles within the company? I did a lot of that. And then as we grew and started taking on clients, I was mostly focused on, sales, adding more properties to our management, ensuring, our two key stakeholders we were keeping them in mind as we grew, which is our owners and our guests, kind of continuing to focus on those stakeholders while we continue to grow. When you're in a startup and it's the three of you, you're all doing a lot of things all at the same time. So like I was doing finance and I really had no business to be doing finance, as you can clearly hear from this story. Not that like Michael or Luke would have been any better at it in particular, but none of us had that background. And so it just kind of became my responsibility. And so over time, finance was not my strong suit. So that was one of the things I quickly looked to offload from my plate so I could focus on sales and growth and the overall picture and the overall organizational health. And then, as we grew, just kind of natural things, you kind of say, hey, what should our organizational chart look like at this size? What should it look like at this size? What should it look like at this size? And which positions need to be filled in which order to get to, where we're trying to go. And so over time, my role became more and more sales focused. I had fewer other responsibilities we could delegate out to other people, became more and more sales focused. And then kind of got to this point where, once we kind of hit that 3 million or so in revenue, we realized we had to have a pretty major reorganization with Michael, Luke, and myself in particular, which was challenging because we were all equal partners. But we couldn't be in equal roles anymore. And so that was a pretty big transition where I moved from just doing sales to, okay, I am full-time just running the company and I don't have enough time to do sales because I have to spend all my time just running the company itself. That was a pretty big transition. And that's where I kind of moved up from just the day-to-day sales to running the company.
How did you guys manage to not let the egos get in the way of that conversation of deciding who should be doing what and what kind of title should each of
Mm.
us have?
Yeah, no, it's not easy. It's painful. It took a long time, took a lot of conversation. I think this goes back to and we did this way early on when we were talking about buying even the fiveplex together. Being really intentional with our conversations around what's going to happen in this situation. And then reflecting myself personally, are these guys I want to do business with, like be in business with? I'm essentially marrying them. I mean, it's very similar. Partnership in business is very similar to marriage in life. Honestly, it really is. There's a lot of give and take. There's a lot of sacrifice. There's a lot of not my way, but your way. And I'm happy to do it. There's a lot of I'm serving you and I'm happy to serve you. Um, so you have to be really careful about who you get into business with. And I know people have different philosophies about this. So this is just my perspective, just to be clear. Um, so we were really intentional really early on of like, I'm getting into business with people I trust. And so when that conversation came up of like, hey guys, you're going to have to report to me and you're going to have to do what I say. I'm your boss. Like you have to accept that if you want to continue to have a position at this company. And here's all the reasons why. And of course I didn't, I wasn't quite this blunt. I was more of just saying, hey guys, here's our situation. Here's why it's not working. We need to make a big shift. Let's have a conversation about that. And I wasn't honestly that inclined to be in charge because there's a lot of responsibility and there is a little bit of kind of distance you have to have between yourself and even your partners to some degree in terms of the actual roles you're playing within the company. And so it's not necessarily a position I sought. I would have been pretty happy just doing sales because it's easier. I don't have all that responsibility and I know I can do it. So that was also part of the conversation, like who's the best person of the three of us to run the company. Once I persuaded them, we need to do this reorg and this is what it should look like. And we had a bunch of conversation about that, right? That wasn't just like, hey guys, this isn't how we need to do it. Let's do it. It was, hey, I think this is how we need to do it. What do you think? And we had conversation around it. Like, okay, well, they thought this, but what about this issue that comes up with this when we go from here to here? And how is that going to be resolved, our current system? Because of course there's a lot of pushback of like, no, why can't we just do things the way we have been more or less to some degree? And there was a lot of that, like trying to maneuver, well, what if we just did it like this way differently? And maybe that would be, fundamentally different for our problem. And now we'd come back to that and there'd be issues with it that I would point out. And so I think, it was a process over weeks and lots of conversations and we decided to make the decision and what was best for the company. I mean, the big transition that happened there was when we started this business, it was very much built to be a lifestyle business for us where it wasn't like a huge commitment. Like it was okay, if we wanted to go be out of the office, not work on something, like it wasn't a big deal. We built the business to support our lifestyles. But it grew, we had way more traction than we were expecting and we grew really fast and it started becoming a real business really quickly. And so part of this conversation was like, hey guys, when we started this company, our intention was for it to be a lifestyle business. I think that needs to change. And I totally understand if you don't want to be a part of that change. Like if you want to get out, we'll make it happen. But I think that what's best for the company, what we really need to be thinking about here is making this change from lifestyle to like an actual business. And so that was the root of our conversation of, should we make that change? Should we stop growing? Should we, if we stop growing, we're gonna have to let some people go because we're not built to be the size we are. So if we're gonna stay here, we're gonna have to lay people off. Just understand like that's the alternative decision we're making. And so that was the root of the conversation. And once the decision was made, no, let's grow this, let's make this a real business. Let's grow it. Let's see where it can go. Once that decision was made, and there's no coercion here. I mean, these guys are really accomplished and successful men. Like they are very independent thinkers. It's not like I'm just like back here manipulating everybody to do what I want. But they saw the benefits were greater than the downsides of becoming a professional business. But then they make the logical next step of like, okay, if we are a professional business, this is how we need to be structured, and here's why. Okay, this is how we need to be structured. Well, who's the best fit for this structure for each position? Okay, well, we're going to shake it up, and now Jacob's going to be the CEO, and Luke's going to run sales. So I don't know if that gives you quite the insight you were looking for, but
well, it does. It does.
Yeah,
it does. I mean, of course, I think that if you guys had come at it with ego first, then it would have been like conflict, and maybe you would have not, gotten to a place where everyone is happy with the outcome and committed to make sure that they develop their new role, like they did, that they put all the effort into succeeding at the new role. Now, I want to just touch on like the difference. Yeah, go ahead.
Just to clarify real quick, there was a lot of conflict. We do all have egos, and there was problems, right? Like I'm
sure.
I'm not making it sound like it. This took a lot of time, and we had to. And what's beautiful about our partnership is that we have our roles within the company, but we also have our roles as owners of the company. And one of the things that I think we've done really well is in that owner of the company meeting, that's where we're all equals, talking about what do we want from the business? What are we trying to achieve? I'm not in charge by any means of that meeting. And we've been
Mhm.
doing that every week, basically, as owners. And sometimes those are the meetings that get super heated, right? Like where you get mad at each other, yell at each other. Like there's real conflict, but these are guys I trust who will gain perspective, even if in the moment or in the temporary period of time, they may not like it, or they may disagree, or may have strong disagreements.
Mhm.
Um, these are guys I trust who we will reconcile and be like, you know what, I was probably too heated about this thing, and I do see your perspective, and it is really good. I may still have a disagreement with it, but I actually do think your position's better, or vice versa.
Mhm.
I could say, hey, when you yelled at me, that was actually like really good. Like I needed to hear that, and you were right that
Mhm.
what I was doing was wrong, or needed to be rethought through. So
Mhm.
I don't want to make it sound like this is all
Yeah, no, no, no,
sunshine and
definitely.
roses. There's
It is.
definitely
I'm sure
serious
it's not.
conflict.
I'm sure it's not. But I like what you just said there. Like you differentiate the role you guys have as owners from the role you guys have as operators, which is is an interesting perspective. Probably the right way to look at this. Um, so that's interesting. What do you how do you think differently when you're thinking as an owner versus as a CEO? CEO as in operator, owner as in like, this is kind of the machine you're building.
Yeah, it's a great question. And before I answer that question, I'll add one more thing. Not only do we wear our hats of our roles within the organization, our hat as an owner of the organization, we also have a hat as a client of the organization because our company manages our own properties just like it manages our clients' properties. And so there's actually
Mm.
three different hats we all wear, and we have to work really hard. And we often don't do this very well, but we have to work really hard to separate those hats when we're having conversations about something. Like if a mistake is made on your property, you have to make sure you're wearing your operational hat and you're following your operational processes, not I'm the owner of that property and I'm really angry about how this thing was handled, right? You have to be able to differentiate those things. And it's really hard, but it's beautiful because when you have that owner hat, you understand what your owners, your clients are feeling because you're experiencing it yourself. And so it allows you to understand and provide better value or service to your owners, which is why I think we have grown so fast and why our owners love us. And we have, record low churn rate of owners leaving us for others. But to answer your question of what's the difference between being an owner and being the CEO, um, I think the owner, as an owner, I'm looking way much higher level on the macro level of like, what's going on in my life personally? What do I want to achieve personally? What do I want my world to look like? What's going on in the marketplace? What's the best time to to sell? Like, what's if we're going to sell, or do we just grow this thing and hold it forever? Like, the questions you're asking as an owner are pretty different. And the CEO, I'm like, how do we make more money? Like how do we increase top line? How do we increase our gross profit margins? How do we maintain our quality? And how do we ultimately maximize not only the total net income amount, but also or profit, the total profit amount, but also the profit ratio. So all I'm thinking about is how do we make more money for ourselves and our owners without,
Mm.
losing quality.
Mhm.
So
Mhm. Interesting
as an
distinction there.
owner, like I care about that as an owner. Like at the end of the day, I want profit, right? Like
Yeah.
as an owner, I just want profit, you know, and I want a
Mhm.
good exit, whatever that may be. Um,
Mhm.
but the CEO hat is just way more than nitty gritty. How do I
Interesting.
achieve this?
I heard this somewhere. I don't know where it was, that like all businesses look the same when they're looked at from high enough. Like when you step back enough on whatever business, like they are all fundamentally equal or very similar. So it's interesting. Now, when you go and do that transition where you officialize these new roles, right? And now you gotta go ahead and start executing on these new functions that you guys have established. Uh, did you find that there was indeed like an increase in weight on your shoulders from the responsibility, quote unquote, of now you are on charge, now you're CEO, or like what is it that changed for you when that decision was taken, if you look at before versus after?
Yeah, that's a good question. I would say yes. I mean, I feel more weight than I did before because it was a really intentional group decision saying, you know what? We trust Jacob with taking this thing to the next level. And we're gonna submit to like his direction and authority to get us there in a really like intentional and different way. It's not my friend is my boss. It's this guy is responsible for making us successful and therefore I will defer to him. That's a lot of responsibility and trust, that they put on you. And it's one of the main reasons I wasn't necessarily wanting to become the CEO. Um, yeah, it's very burdensome.
Mm-hmm, mm-hmm. And like practically speaking, let's say if we look at it from like a skill sets point of view, do you think there were any skill sets that you had to purposely try to start developing when you took on
Really.
that new role?
Yeah, absolutely. The leadership skills in general, I've not really led large organizations before. And we're not that big, but
Hmm.
35 people, 40 people, like there's enough stuff going on. I've never really been in that role. And I think I have a lot to learn. I also do want to add one caveat because I just ended that last question by saying being the CEO is burdensome. It is also a joy. Like I love it. I am constantly challenged. I find every day I've got new problems that I need to figure out, and it's really fun. Um, so I just want to add a little caveat. Yes, it's heavy and burdensome, and it's a lot of responsibility, but I also love it.
Hmm.
Um, and then for the skills, it's all I think mostly it's like leadership skills. I have a very analytical mind, I would say, and I obviously have some people skills from my sales experience. But there's a difference between like selling and persuading people to buy something. There's a difference between that and motivating or inspiring them to build something. And I think that that distinction is there's some of the skills overlap, of course, but I think there's a lot more for me to learn and develop in that respect of I'm not trying to just sell people like some people will say, "Oh, you're just selling them on the vision of the company." Um, but I think that that's a way of saying it, but I think it's more of how do you inspire people to build something great, not for you, but for themselves. Um, so yeah, I have a
Wow,
lot to learn
that's
there,
so
but I would say
interesting.
leadership skills.
That's so interesting. Yeah, because you always hear people say that being a CEO is sales, sales, sales. Is just you're selling to investors, you're selling to employees, you're selling to customers, you're selling to stakeholders. How is what's that nuance between selling to a customer versus selling the vision to the team? Like what have you learned about that distinction?
Man, that's a great question. I think when you're selling to a customer, you are connecting like on an emotional level, you're really trying to come alongside them and be a partner and help them achieve their goals. Right? Like they come to you and say, "Hey, yeah, I want to own investment real estate." You're like, "Okay, but why?" And then they say, "Well, I want to be able to travel." And you say like, "Okay, why do you want to travel?" And they're like, "Well, I have a great time when I travel and exploring new things or whatever. And I like doing that with the people I love or whatever." And you get back behind their why. And then as a salesperson, you come along and you say, "You know what? We can help you get to that, why you're doing this in the first place. We will come alongside you and help you do that." With employees, it's more of, "Hey, there's this thing in the world that's not great, and we can be great at it. We can fix this problem and make people's lives better. Why don't you come along with me and help me make people's lives better in this regard?" It's kind of it's a different thing. It is a partnership, right? You could say that's the same thing. It's a partnership, right? But the partnership on the client side is let me help you get to where you want to go. Whereas on the business side, it's like, let you help me where we ought to go, right? Like you want people who are on board with your vision, who are already interested in what the problem is, the problem that you're trying to solve as a business. What is that problem? And find people who are excited about solving that problem and then building towards that together. I don't know if I'm
Hmm.
answering this question very well. That's a
Hmm.
challenging question. be
Yeah, I
honest.
know. Like I wouldn't know what to answer. I'm just curious because I had never thought of it this way. Like you brought it up as far as like being similar but different in a way. Um, and
There's
and
nuance.
there's
There's nuance
yeah,
everywhere.
for sure. And it's also like we were talking about on the phone the other day that you have to have a vision that's big enough for the vision of everyone else in the team to be able to fit inside of that vision, right? Kind of as a leader. So how do you think through that? Does it come natural to you still to be the one with the biggest vision, or is it something you have to work on as far as making sure that your vision is large enough for the rest of the team's visions to fit inside?
Yeah. Well, first of all, I have to compliment you. That was a great concept that I hadn't heard before about the ambition of the leader or the visionary being the biggest, and everybody's having to fit within that. I actually think that that's really a great explanation for understanding of how things actually are. So kudos to you. I think that's really great.
Oh, it doesn't come
Um,
from me at all. I heard it at probably a book or video or
yeah,
something. But yeah,
sure,
it's
sure,
interesting.
but
Yeah.
you're putting it out there, and it's a great. I think it's a good concept. I think it's solid. I think it corresponds to reality really well. Um, yeah, I mean, it's definitely the case that the people we have today, their visions fit within, or their ambitions kind of fit within mine. But it got me thinking when you said that of like, do we intentionally only find or look for people whose ambitions fit within the existing ambition structure? Or do we allow people who have bigger ambitions to come into the organization and we try to make room for them so the organization can actually get bigger?
Interesting.
That question you're asking, I think, is really the question that takes you from 10 million in top line revenue to 30 million in top line revenue. I think it's what you just identified is the leaders of the company. You get to about 10 million in revenue, and unless the leaders of the company are willing to allow somebody to come in with a bigger vision and ambition than them, will be stuck. So I think what you have identified is a problem that we have not yet faced, but will be a problem we will face in the future because I don't have a massive ambition.
Interesting.
It could
Uh,
change. It
yeah.
could change. And this is the big thing about like why it's so hard to grow a business is because you as the founders have to constantly reinvent yourselves. So we could get to 10 million in revenue and we could say, no, we're good. This is great. Let's just stay here. This is fine.
hmm
Um, or we could say, no, we want to go to the next level. And to go to the next level, we either have to increase our own personal ambition level, which is like hard to just like decide.
hmm
And then, or the alternative is bring somebody else in who has a higher ambition level. And so it's a really great question.
And so what are you spending most of your time on these days?
Hmm. Yeah, good. That's another good question. It's mostly around quality, right? Maintaining our quality as we scale, because that's always really, really difficult to do. It's not super hard to scale, but once you've got a traction, it's not super hard to grow. But what is really hard to do is maintain your quality as you grow. And so that's a pretty big focus of mine right now is making sure our quality is still on pace. I also spend quite a bit of time developing my leadership team. So we have kind of a core team here of our leaders. There's 7 of us, including myself. And I spend a fair amount of time thinking through and spending time helping them develop as leaders of their own departments and teams themselves. That's where I spend a lot of my energy right now. And then kind of the
hmm
third area I would say I spend my energy is larger strategic growth opportunities. So thinking about,
hmm
for example, buying other property managers or going after individuals who have portfolios or talking to investors in the marketplace to see, hey, maybe there's an investment deal that makes sense here that would help us grow and hit our goals of serving 1,000 owners and distributing 200 million in profit to our owners. Maybe there's an investment path of
hmm
outside capital that makes sense there. So that's kind of the 3 things I'm really focused on right now.
hmm So if we break those down, I mean, we talked a little bit about leadership, as in like you becoming a leader. But what does that look like when it comes to you developing leadership within other people?
Mm. Yeah, it's around the inspiration, right? I can no longer just inspire everybody in the company all the time because I'm too far removed from everybody all the time. And so I have to rely on my leadership team. I have to inspire my leadership team, train them and develop them on being culture builders themselves within their departments so they can pass that down to their team. So we have a cohesive whole, but I can't. Our company's too big for me to be having these culture conversations to really drive that throughout every single person who works here. And so on that development of leadership perspective, that's very much of like, I need to learn. This is where I'm learning, right? I'm learning how to develop leaders. Like, this is where I need a lot more skills. Like, I have a long way to go. Is how do I get the culture that's in my head and in my heart to them to then pass down to their teams?
Yeah, because if it's not done intentionally, it's basically hard to make sure that it
Fades.
is communicated and passed along, right?
It fades. Yeah, it fades away. And I don't want to sound like we do this like really well by any means. We have a long way to go. Um, right now, I think one of the things that we're struggling with is the quality of culture in our field work, our field operations teams, our housekeepers and our
Hmm.
technicians. We have a lot of churn right now with those two departments, and that's mostly because we're having a difficult time selling the vision and explaining why we're doing what we're doing and why they should come along for the ride.
And I hear that a lot. I hear that a lot, and it seems to be almost like, of course what they do is super important. Like it's at the center of what we do. Cleaning houses. Without cleaners, we wouldn't be in business, and making sure
Mhm.
they're maintained. Um, but yeah, like getting people, let's say at that level of responsibility of being individual contributors on the field, to see the bigger picture, is like it kind of doesn't go together. Like the ability to see the bigger picture, and the work you're doing today. So how do you connect the two in a way that they're going to understand?
Yeah, that's a great question. I'm not sure I know. I don't think I have
Yeah.
the answer here. I I I have heard from some very successful property managers. I got to talk to one of the CEOs of a really successful company. I think manages 600 or 700 units now. And we talked about this very problem. And what he outlined, which I honestly haven't done a great job of pushing down and implementing, but what he outlined is make sure they have a clear path to grow, right? Make it very obvious. Like, hey, if you do a good job as defined by the cleaning reviews of guests after your cleans, if you do a good job, you'll get a raise. If you continue to do a good job over time, you would get promoted to a supervisor. If you continue to do a good job, you can go from a supervisor to an assistant manager. Now you're on a salary, you
Mhm.
get benefits. And if you continue to do a good job after that, you can become a manager of the cleaning department or this market's cleaning department. Like, you could go from where you are now to earning 3 times as much money, having way more stability for you and your family. And there's a really clear path for you to get there. And he said that
Mhm.
that was the key. He said that was the key. Providing upward mobility from the very bottom rungs of your company is the key to minimizing that churn.
Wow, that's interesting. Yeah, it makes sense. Hard to put in practice, like everything that we're talking about here, but makes sense. And so you talked about the cultural element of ensuring that you guys maintain culture, throughout the ranks of the organization. But then there's quality control, and of course they're
Mm.
interrelated, right? I'm sure that if you have
Mhm.
better culture within your field team members, that should communicate into better quality as far as cleaning and maintenance goes. But like, let's talk about that quality control piece, because it does become way harder as you add
Mhm.
more properties, and it almost seems like there's all these different forces fighting against you and against the quality, right? Like, from OTAs becoming more and more strict, on quality and suspensions, and
Mhm. Mhm.
not allowing
Mhm.
relunches of listings, all the way to the fact the way they calculate the average review scores, where, like, when you have a bunch of properties, like one single review can kill your profile. Like, so how are you guys tackling that one? You mentioned how you're tackling the
Mhm.
cultural aspect of it, but do you see it as the culture will solve the quality, or do you think there's something that has to be done
Mm.
directly to try to solve the quality as well?
No, I don't think just doing the culture alone will solve the quality challenge. And I gotta give a shout out to my ops director, Jordan Millara. He runs our entire operations team, housekeeping and maintenance, and he has done an incredible job in 2024 of rebuilding our entire team from the ground up, from taking 1099s into W-2s and basically tripling our margins in the housekeeping team so that's no longer a loss center for us, but actually a small profit center for us. He's directly responsible for that change. And now he's working very vigorously on, now that we've made the change on the dollar side, we have to make a change on the quality side. And he's working very closely with his housekeeping team to make that happen. And I think he's going to be successful. I really do. He's done a great job so far, and I'm excited to see, how he addresses this very specific question. And there's a quality issue not just on the guest experience, but there's also a quality issue on the property care, like the quality of the property going down over
Mm,
time. And how do you balance keeping the quality of the property up with generating profits for the owners so that they don't get mad and drop you for another manager?
mhm,
And there's a delicate balance to walk there that's very difficult. And I don't think we have it figured out. But our quality needs to improve, but we're still the best in the market. We're the best manager in our market in terms of quality, but I'm still not pleased with where we are and where we've been. So how we drive that through is you just reiterate it with your team over and over. Like, hey, we got, what caused this? Where's there a pattern and what's causing it?
mhm,
And it's almost always around property care or housekeeping. And
mhm.
so, you're constantly evaluating not just your people, but also your processes. And you just have to continue to make improvements and continue to drive it down and through. But yes, very challenging.
Yeah.
Yeah, very challenging.
Yeah. And I like what you said. Like it's about repetition. Like I've also heard this saying of like we have to be repeated more than we have to be thought. Like we going back to like information is not
Hmm.
the problem, is lack of action. That's the problem. Well, in a similar way, the problem is not that you don't know what to do, is that you forget it, right? Or it has to be brought to your face often, so
Hmm.
that
Yeah.
you don't end up forgetting about it.
Yeah, and I have one other comment about this too, because you were speaking about OTAs in general, but you were specifically referring to Airbnb.
Hmm.
I'm guessing
Yeah.
because they have become very anti professional manager or property management. They're trying to push us off their platform. And so what I always tell people is that if you're going to be a professional short-term rental host and you're going to have a portfolio of properties, or you're going to be a manager, you have to become multi-channel, and you have to do it fast. We saw the writing on the wall about a year and a half ago, and so we've been working really hard to reduce the percentage of our total bookings on Airbnb. And we've been very successful thus far of getting them down to about 55% of our total bookings, and we're going to continue to drive that down. And Airbnb, I think, will suffer as a result because the supply they'll have on their platform won't be as good because a lot of the
Hmm.
professionally managed supply will go elsewhere. And so my recommendation on that, and one of the ways you can protect your quality, is by not being on a single channel, because you give them a lot of power.
Hmm.
Like you said, one bad review can really hurt you, or one listing suspension can really hurt you. But if you're multi-channel, it doesn't hurt you nearly so much.
Hmm. Yeah, it protects the longevity of your business. It
Hmm.
mitigates the risk of a platform having the power to put you out of business. um, yeah, it's interesting because people have very you know opposite opinions about this, right? There's those that just like us think be on more channels, right? And then there's like, okay, how many channels are too many channels? And that's where, like, for example, we at Angel Host tend to believe that it's good to be on the main ones, but then you can get distracted in trying to go with too many channels to a point where you know they're not bringing any incremental value, but they are taking time away, because one thing is being on a
Hmm.
channel, another thing is being optimized on a channel, and that takes time and that takes effort, right? So like there has to be a line that's drawn as to how many channels is too many channels. um, and then it's also like recognizing that you can't kill the golden goose. I don't know if that's the right expression, but like, as in, if you're looking at OTAs as a way to get guests for the first time that you then retarget you to get repeat guests afterwards, well, you want to make sure that they still come for that first time, through that OTA, and the difficulty in what you're describing is that Airbnb is punishing that very same behavior, right? Airbnb is punishing that very same behavior of not being exclusive, of blocking dates, of being on this other OTAs. So I get how strategically, like, it has to be something that you try to diversify in terms of booking sources so that you don't put your business at risk. But how you do it, I think, is also has to be done in a careful way.
Hmm. Definitely. Yeah. And I would add too that depending on your portfolio size and your goals with your rentals should shape your strategy. But if you're just going to have two listings, stay on Airbnb and only be on Airbnb. You're going to be fine. But if your goal is to grow, I want to have 15 plus listings myself or under management, then yeah, you really need to consider how am I going to protect my interests, um, and not be so reliant upon a single entity with some concentration risk. But you're right, it's not easy. It's not easy. And that's why
Mhm.
scale is important because scale helps you navigate or bridge the not easy part.
Mhm.
If you only
Mhm.
have 5 listings, it's probably not worth it. I mean, it's just not.
Mhm.
Just be on Airbnb.
Mhm. Mhm. And yeah, and so what's your current proportion of like direct bookings?
Direct is about 10% right now.
Okay. Okay.
And it's something you said too is also important for your listeners to understand. Some markets are travel to destinations return markets, and some are not. Colorado Springs, we get almost no return travel. Doesn't matter if we
Okay.
retarget, doesn't matter how much we retarget.
Okay.
Owning that
Okay.
guest relationship is really, really not that valuable. The total value of that guest is pretty low.
Mm.
And so in our primary market, and so we don't really care too much about retargeting and owning the customer relationship. We focus far more on what is the lowest cost way of acquiring every guest.
Mhm.
And typically the lowest cost way of acquiring every guest is to go through a lot of OTAs. But that's not always the case.
Mhm. Now, let's talk a little bit about brand. I'm curious to hear your thoughts on the importance of building brand, what brand means to you, and how you go about balancing a guest facing brand with an owner
Mm,
facing brand.
yeah. Well, we're very different than most managers in this respect, actually. Because as I said earlier, our guests are very low return market. We don't care too much about our guest brand. Um, I guess we kind of have one, but not really. We care a lot more about our owners. Um,
Hmm.
so our brand is geared towards our owners, and maybe someday we'll build a guest brand. I doubt it,
Hmm.
because it's so hard to compete with the OTAs on a cost per guest acquisition basis that it's like
Hmm.
not worth building a guest brand. It's really not, unless you are in like a dedicated travel to market and you're there for a long time and you're the same 1,000 families are booking your properties every year. Like unless you're
Hmm.
that, it it I don't see how you can compete on a cost effective way with the OTAs.
Hmm.
Um, so, and I would tell your listeners too, like if you have less than 15 listings, you have no business having direct booking. Like, don't do it. It's not worth your time. Not worth the hassle. Not worth the fraud. Not worth the chargebacks. Not worth all the risks because the OTAs do provide value to you. And so, if you have less than 15 listings, I wouldn't touch direct bookings.
Hmm. Hmm. Yeah, no, that makes sense. So what you just touched on, just to kind of wrap it up here, is actually the thing that I'm super interested in about this podcast, because I started by saying, we're trying to bring together what we think are two sides of the same coin: real estate and hospitality. And what I found so interesting is that there's operators that will navigate more towards one side or the other. Like there's operators that are going to be more on the hospitality guest side of things, and that's what they're going to be building brand for, and that's what they're going to be trying to, you know, focus on, right? Like, and then there's those that see it as, at the end of the day, there's going to be a lot of rotation of guests. There's, in the case of your market, not a lot of repeat guests. There's not much value in that relationship. There's a lot of value in the owner relationship, and that I see as the other side of the coin of this industry, the logical side of this industry, the numbers, the analytical side of this industry. And it's just interesting to see where you decide to position yourself. Let's talk briefly
Well,
about, yeah, go ahead.
Can I add one thing? Because you're right.
Yeah,
I
yeah,
think your
yeah.
assessment's right,
Please.
and there's no right answer to this. But one of the key other aspects that should affect your strategy is whether you have really unique property. If you
Mhm.
have very unique property, then you should be more on the guest acquisition side and focused on the guest side. If you have pretty standard properties, just well done, it's more of a commodity. You're just a commodity. You're not special. And so you shouldn't have like this flashy guest brand because you're not really selling anything special. So I would say that's like another key distinction on your strategy, your listener strategy. If you're going with these really cool and unique properties, and don't confuse yourself either. Having a 4-bedroom home in a neighborhood with a cool accent wall is not a differentiated experience. Okay.
Mhm.
That's just doing the commodity well. But
Mhm.
if you have a really unique property like a train car on top of a hill in the middle of nowhere, like that's really unique. And you should build some direct booking and some brand around your listing, and
Mhm.
focus more on the guest experience and the guest brand. So I just want to add that little caveat
No,
there.
thanks. Yeah, that makes sense. And then also a comment to your comment is, a lot of people mentioning that commodity, type inventory will just struggle more and more as time goes
Not
by.
true.
So, not true?
Not true.
Okay, I want to hear about that.
Yeah, I mean, we're not down. I mean, our portfolio is pretty much flat and even up a little bit year over year, and we have almost exclusively commodities. It
But it's
has more
probably
to do with
because you do
your
commodity right. Like
yeah,
like you
sure, you have to
have
do
to
it
you have
well.
to put the extra effort to make sure that your
Yes,
commodity
but
type
but
inventory
here,
differentiates itself.
sure, but this isn't a distinction between commodity or unique. That's not the distinction we're making. What's
Mhm.
actually happening is that the industry is professionalizing. It's
Mhm.
professionalizing on the commodity side, and it's professionalizing on the unique side. There's no difference
Mhm.
between those things. They're both going to perform very well, but
Mhm.
the entire industry itself is professionalizing.
Mhm. But I'm curious to hear your thoughts on. Okay, so one thing is the type of inventory you have, right? It can be commodity or it can be unique, and then the other thing is, is it operated in a professional way or a non-professional way? So yes, there's a trend towards more and more professionalization. I agree. But wouldn't you say that a lot of the supply that we hear a lot about in terms of like oversaturation and all those kind of things, that a lot of that has been commodity type more than unique type inventory?
I don't know if I would differentiate the amount of supply being added because I see a lot of unique supply being added too. So I don't know
Hmm.
if I would make a distinction there on the total supply being different between commodity and unique. Here's the
Hmm.
thing about unique. Unique, when done professionally, can be
Hmm.
very profitable. Okay. But you have to know how to market. I always tell people like if you're going to do unique stay, you need to have a marketing background, right? Like specifically a consumer marketing background. Because if you don't, the other guys who
Hmm.
do have unique stays and consumer marketing backgrounds are going to eat your lunch. And this is
Hmm.
going back to the professionalization. It's about skills that you may or may not have. If you're going to be in an active investment category like short-term rentals, you want to have skills that benefit you in whichever strategy you pursue. Because it's not like Bob over here can put a train on a hill and build like a WordPress website and like expect consumers to come and find him. Like they're not. His unique stay is not going to be successful, right? It's just not. He has to build an
Hmm.
Instagram brand. He has to be able to know. He has to know exactly how to target people on Instagram. He needs to know how to do ad spend and to track his return, his ROI. What is it called? Or ROAS, his return on ad spend. He needs to know. I bet you 99% of people who are trying to build unique stays don't even know what ROAS is. And that's a problem, right?
Hmm.
You have this expectation of outsized profits, but the reality is you have to be able to perform. And then here's the other thing. Unique stays, when professionally done, do outperform commodity rentals professionally done on a yield or cash flow basis. They do. But here's the thing that people don't talk about. Your resale value, people try to say, oh, it's based off of your NOI because it's a commercial opportunity. It's a unique experience. It's whatever. But that's not the reality, I don't think. I think the market's going to be like, no, it's a train on a hill far away from everything. Like there's no comparable value and the resale value isn't there. Whereas if you own a commodity, you can push that commodity right back into the long-term rental pool. You can push
Mhm.
it right back into the resale pool for somebody to just live in and live in the house. And so
Mhm.
you have a lot more buyers for an exit on
Mm.
your commodity, but you don't have very many buyers on an exit for your unique.
That's a good
So
point.
yes, you get a higher yield, but your exit may not be as profitable. And so you just have to understand when you think about your strategy, which one you want to
I think
target.
it's a very good point. And so, if consumer marketing is the skill that you need to have to succeed at unique property type, what is the skill you need to have to succeed at commodity?
Systems. You got to have an ops mind, operations mind. You got to
Interesting.
control your costs. Yeah.
Got it.
And you got to scale.
All right, Jacob. Listen, I could keep you here for hours. Looking at the time, got to wrap it up. But thanks so much. This has been a lot of fun. Thanks for all the insights and the fun conversation. The time went by super fast. Yeah, thanks for having taken the time. Where can people connect?
Yeah, pretty easy. We have a website. It's just renjoy.com, renjoy.com. And then if you want to reach me personally, it's just Jacob at renjoy.com.
Amazing. Thanks so much, Jacob, for taking the time.
Yeah, thank you for having me.
All right, have a good one.